We are back. All right, so for this video, I'm going to talk about how I trade SPX same day expirations or 0 day to expiration contracts. We'll talk a little bit about my setup first. So kind of the indicators that I use, my layout, and some of the things I consider before even entering a trade. Basically, am I bullish or am I bearish? I try to get that sense coming into the day. So first thing I do is I always check where the futures are at pre-market. So are they up? Are they down? Are they kind of flat? That will tell me, all right, if they're super red or super green, I typically try to look to the opposite end. So if it's super green, I'm looking for potential puts at the open, and probably to play the just a pullback and then get a call to continue the trend, and then vice versa for if the market is really down pre-market, I'm looking to potentially play a call and then eventually short at some key levels. Now obviously things change. Price action really dictates everything. But that's really like my first high level, like what I'm thinking about. The second thing is I like to see where is the price action at compared to really key levels that I have. So I subscribe to a membership called Simpler Trading. One of the guys I follow provides levels or charts for his members, and honestly, they're like golden. So I use those to tell me where is support and resistance, basically, and a couple other things that he talks about. But that's mainly it. And those are targets. So I look at that. I look at where futures are at in relation to those levels. And this is all, pre-market. And then once the market opens, right in the beginning, the two things that I look at that I consider is something called VIX and then ticks. So what VIX does first is this is the volatility index. And as VIX goes higher, so if it peaks up like that usually means that the market is going down. And then when VIX goes down, usually means that the market is going up. So I keep an eye on that. I try to see where does VIX open up. Is it high? Is it low? Where is it at? Where is it trending? And then tick. So tick is maybe a little more confusing, but you may hear me refer to this as positive ticks or negative ticks. What this just really refers to is anything above 0, which is this big white line right here, means that at the time the market is people are buying, basically. So there's a lot of buying volume. And then when it falls under 0, it means people are selling. Now, plus or minus 600 is really not a ton of pressure either which way. But if you break 600 and you get anything above that or below that, that means there's some pretty good pressure on either side. So for example, today we opened up at negative 15, almost 1600 ticks. That's substantial selling. So that's why we dropped so heavy pre-market. So that's something like that is serious. So anyways, so I look at VIX, I look at tick. That's pretty much it as far as like the things I consider before even entering a trade. Then I try to look at where is, so I use ES. This is the futures version of SPX. and SPX, which is right here, is usually around a couple of dollars off compared to ES, but it's the same thing. Anywho, I like to see, where is ES at the open. I also like to see where is NQ, which is tech, aka QQQ, and then I like to see where YM is at. Now, y'all hear me talk about YM a lot. This is the Dow. Now, when you play ES, the reason why these two are, or I should say SPX, but again, I mean, you may hear me refer to SPX as ES, but the reason why NQ, Tech, and YM, the Dow, are important is because these two make up the ES, basically. It's the best way to look at it. So what does that mean? So let's say if you look at today, NQ finished almost 1% negative. However, YM finished about pretty flat for the day, but it didn't lose. But if you look at ES, it was down 0.25%. So what happens is that there's this relationship, this tug of war. So and it's called rotation. So if tech sells off and YM is popping, then we call that rotation, and that means that ES is probably going to kind of get caught in no man's land. It may move, but it's not going to move substantial. And the vice versa is the case. So if YM is dropping and tech is popping, ES could actually move up because tech is so strong and is so heavily weighted in the S&P that it could carry the market if it's super strong. But nonetheless, these are things to pay attention to. What we really want to see when we're ripping is when both of these markets, the Dow and the tech are both moving at the same time going up. When that is when the whole market basically is moving together, that's when we get those really substantial pushes. Okay, so that's rotation, and that's YM. I always keep an eye on both to see the price action for both and see which one is lagging behind, and that will also determine whether or not I want to get in to a play or not, just based off of how they're interacting with one another. Okay, so I'm going to drop down to, I typically trade on a 3-minute chart, but I'm just going to drop down to a 1-minute chart on ES. And let's take a look at how we opened. Okay. So So what I was looking at this morning was the fact that we dropped all the way down from, let me move this here, right? That's a pretty substantial drop. But then we started to base right there. So when a stock, or in this case an index, starts to kind of find its footing here and base a little bit, there's a chance that it can find its ground and then go up. Now that's not guaranteed, obviously, but it's something that I watch, and it actually happened to be at a really key level that I had. So I'm going to turn on my levels just so you can see what I had. You're going to see a couple of lines here. But this 4101.75, give or take $1 or $2, is a really major level. And the fact that it kind of based, off of that, let me know, or gave me an idea that, hey, we may be able to catch a pop. So I got in right at the open, and I got in with the 41.55 SPX call. So I'm going to click on this. It's going to load it over here. And then let's take a look at how that contract behaved. We'll drop down to 1 minute as well. Okay. So I got in, my fill was at 265. So I got in right around here. So let me just mark that on the chart. 26, that's fine right here. That's good. Whoops. So around 25, 26. So I got in there. We pushed up, right? And right here, this little consolidation, right? This is, you should consider this resistance. So we pushed up, and I'll zoom in just a little bit, and we did get a little bit of resistance there. And I was being patient, and we pushed through, and then we came back and tested it and really held it. It also happened to coincide with a level that I had here. So there was a couple times that I almost got shaken out. If you look at some of these candles, got me a little nervous, but and we even dropped below it a little bit, but we held for the most part this level. And then from there, we really started to move up and started to rip. Now, the lesson I'm learning on 0-day SPX calls is that on a push like this, right, what happens to these calls is they explode. So the first push, which was right over here, we went from 2.5 to around 5, right? They actually came back down with some of these larger wicks here and came all the way back down to 2.8. I got 2 more contracts at 3 because I saw us kind of holding here for a couple of minutes, and I said, you know what, this is a good opportunity to try. So I got in 2 more contracts. We eventually start to get our feet and we start moving, and it pushed all the way up to 981. Now I peeled off one at 6, another one at around, I think it was 8. Around 7. And then I held a runner. And this was where my mistake was. We hit up here, which coincides with this big level up here. And if you look at the pattern, this is basically a double top. I'm going to drop to a 3-minute just so we can see it a little bit easier. So we pushed through with these really big candles, and this 41.44 was a really big level. And if you look throughout the day, you can see this tested it not only today, but yesterday a bunch of times. So I got pretty excited that we broke through it. We broke through it strong. But then what happened was that we hit this level and we started to wick. Right? And when you wick a couple of times on a level, right, and then you come test this and you start dipping under what was, basically resistance, and it's starting to be shaky support. That's when SPX is going to kick you in the butt. So those contracts went from 981 and within just a few minutes dropped down to 7, and then almost immediately down to 5, which was right around this area. And then if you look further, once we got this last little push up, probably right around here. Sorry, 11 o'clock. Yeah, this last little push right around here kind of topped out at 529, and then we just gave out. Now, that premium got destroyed. So I went from 981 all the way down to 72 cents. So the lesson here is, more times than not, and I've been learning this the hard way, is that usually the best price you're going to get is that first push. And if you don't take your profits on that first push, or that first, doesn't have to be technically this would be the first push, but like that first move completed, you're going to spend the rest of the day sitting through all types of chop or whatever just to try to bend back up and hopefully get to that same level that you were at before in this contract. And as you can see, we never did. We never got back up there. Even as if we look at the end of the day, we touched 41.44 again. That was around 13.30. Let's see how they rewarded those contracts. So I'll run that same time frame. The highest it got was back to 255. So that's a big difference. One was almost at 10, and then around the same price, around 255 or $2.50 was the max. So lesson here is on that first push, take your profits. Sorry, let me adjust this. Take your profits, and when you start seeing these patterns of wicking, it's better to get out, wait for a pullback, and see if it holds major levels. If it holds major levels, like this one, right? You see a nice big candle like that, and it tries to test, and then it breaks out and then holds this level, right? There's a good chance that it's going to go back up. So moral of the story, take your wins. Don't try to be too cute with SPX. Yeah, it can explode and whatnot, which it does, but you can make a lot of money on those first big moves. Peel some off or take them off the table. Be patient. You're going to get another pitch to swing at and then get back in.